Welcome to Super Profit Club. My name is Sumit Gupta and I've been swing trading for more than about 11 years, in the stock market trading for more than 15 years, and I've founded Super Profit Club some time back to help you and help people learn swing trading and earn money from the stock market. The main objective is that you stop losing money in the stock market. Once you stop losing money, then you can consistently earn this money, right? So if you like, subscribe to our channel, share it with other, click the like button, and put your comments on how you if it was useful information or something that you would like to share on the topic that I'm going to cover today. So the topic that I'm covering today is on why do prices fall and rise, right? That's an interesting topic in the stock market, and I think that's the one if answered, right? If you know the answer to that, and you can look for those reasons why it happens, and then that can help you in your trading a lot, right? Do you agree with that? Okay, so see what happens, why the prices rise, okay, and why they fall. Why can't they consistently keep rising, or why can't they consistently keep falling? Okay, this is based on the law of nature, which is basically every action has a reaction. So whenever an action happens, it has to react as well, right? So if the share is going up, it has to fall as well. You would have heard many times that market is now reacting, market is now, retracing back, etc., right? So if it has gone a little bit up for some time, then it has to rest and it has to react, right? Similarly, when a journey is happening, in every journey what happens is you have to take some rest, right? In every journey you have to take rest, and that rest is a small break, right? Similarly, what happens, so if you see, the prices will keep rising. Something which was worth rupees 100 a few years ago, today that might be about 400 rupees. Something which was worth 10 rupees today, that might be about maybe 15, 16, 17 rupees. So it keeps happening, the prices keep rising, right? But they don't rise at one go. Okay, now let's come to as I was talking about the action and reaction. So you would have seen the waves, right? If you have gone to a beach, you would have seen the waves. So the waves go up and waves come down, right? Sometimes the waves are very high, sometimes they are low. So that's a combination which keeps happening. Okay, so that is so it's not constant. It's not that the waves are always high. Okay. Similarly, if you would have seen moon, the moon wanes and it then grows. Okay, so from a full moon day, it will keep waning for till the Amavasya, or which is Dome Moon day, it will keep waning, keep getting smaller. And from the Amavasya till the full moon day, which is called Purnamasi, it will keep rising, and then you will again see full moon day. So that's what happens, right? So similarly, that is how the prices are also rising and falling in the stock market. That's one reason. Now, the most important point that you have to understand is that market consists of people. So there's a buyer and there's a seller in the market, right? Now, whether that market is stock market or some other market, right? So always there will be a person who is selling and there's a person who is buying. Okay. Now, buyer is willing to pay a particular price for a product and seller is willing to sell the product at a particular price, right? That is what market consists of, right? Now, there's a basic economic funda. What is that? That is the law of demand and supply. Now, when the demand rises, what happens? The prices rise. When demand reduces, the prices may fall a little bit or might stagnate, right? And what happens when supply increases? The prices fall. When supply is limited, what happens? The prices increase, right? This is what happens. So it's a law of demand and supply in a stock market as well. Now, how does that work in a stock market? Let's understand that. So, see, there are professional traders in the stock market. I'll call them professional traders or professional buyers for the purpose of this video. Basically, these are people who work on certain system. The people who work on certain principles. It's not, they just don't buy whenever they want to buy and they don't sell when they want to sell. They have a system to ascertain what is the right time to buy and what is the right time to sell. Okay. Now, when I say right time to sell or right time to buy, that is basically right time, right price to buy and right price to sell. So these people know. You would be amazed that more than 90% of the people do not know this funda, right? They just buy on their gut feel. They think that the price is, now risen a lot, so it is going to fall. So they, they sell, or it will keep increasing further. That is what they think. Sometimes they think the price has fallen a lot, so let me buy. And they do not know what price to buy at actually. They just buy at any price, right? So for these professional buyers, what they do is they look at the market, they say, okay, this is the price. Okay. They buy in bulk. Okay. Now, when they know okay, that this price is X and X price, they start buying. Okay. And they keep buying at certain level. So they say, okay, this is the price at which I'll buy. So when these guys buy, they are buying in bulk. So the demand increases. So when the demand increases for these shares, the price starts going up. The volumes go up, the price also goes up, right? And it keeps rising. Now, after they have bought, they said whatever numbers they would have to buy, whatever price point that they were saying, okay, I'll buy it till this price, right? They will stop at certain point. Now, by this time, what's happening is the retail investor or the retail trader has been looking, okay? Somebody who's not a professional trader, okay? Who's not a professional buyer, okay? Now, he's been sitting on the fence on the side and he's watching and he's saying, okay, this share is going up for last 5, 6, 7 days, okay? Or maybe 10 days or 15 days. Now, is the time when this person gets in. Now, when I say gets in, he buys it, right? Now, the professional buyer has stopped buying, most likely, okay? And the demand now stagnates kind of thing. The only demand is from these people, the non-professional buyers who are coming in, who are buying on gut feel or maybe seeing the price action, etc. And then they buy. So it goes up for a little while because some demand is still there, right? Now it reaches a particular price point. When it reaches that particular price point, the professional trader or the professional buyer starts selling. Why? Because he has been buying at different prices and then he starts selling. He is earning profits now. Now, when he starts selling, because he is bought in bulk, and I'm just taking one example, there are multiple such buyers who are buying. What happens? Supply increases and hence demand is not there. Okay. So the prices start going down. Now, you bought somewhere at very high. After 10 days or 12 days or 8 days of action, when the price was consistently going high, and you bought at a high price, when these guys start selling, the price keeps coming down. So they can still afford to sell at multiple price points, right? Because there's an average price at which they bought and there's an average price at which they are selling. As long as that difference between the two is positive for them, they'll keep selling. And once their stock exhausts of whatever they had bought, if they have sold everything, or they might say, okay, only this number I have to sell and the rest I'll keep with me, then the prices have fallen down till that time, right? They keep looking, the price comes down, again it comes at the same price level, they start buying again, the demand comes back into the market, the volumes come in, and hence the cycle repeats. That is how the prices fall and rise. If you understand this phenomena, what you would do is you would also look at, at the charts, at the volumes and the price movement, and you'll say, oh, this means that, for this time people are buying. Now, how do you keep yourself safe? Look at the volumes. Till the time the volumes are coming in, till the time the volumes are high, and if the price is rising, it's good time to get in. Right? Or have a system, which I teach, in swing trading system, have a platform. Okay, your entry price is between this to this based on a system, not based on your gut feel, right? And when the volumes drop, but price is still higher, going high, what does it suggest? It suggests that, this is the time not to buy. And similarly on the supply side, yes, when the volumes are coming in on the supply side, sell, you have made profit, and just wait. And when the supply starts to dry down, then you would know which is volumes. The volumes will tell you on both sides when is it time to buy or when is it time to sell. That's a very, very good indicator. You can't only, rely on volumes. Obviously, you have to also go on other technical or other indicators, but that would be giving you the strength of the trade that you're taking. Okay, so I wish you all the best. This is I hope you learned something, and now you know why prices rise and why prices fall, and you can implement this in your trading so that you don't stop losing money and you start earning consistent profits, right? If you like this video, like it, subscribe it, and share it with your friends and other people that you know. And if you want to put any comments, please do put your comments, and keep coming back for more lessons on stock trading from Super Profit Club. I wish you all the best. Have a great day.